A very good afternoon to you all. Thank you for joining us for this webinar event hosted by Coronation Securities. I'm Wale Famarewa. I'm delighted to be your MC and to moderate the session today. And today's session, as I'm sure many of you already know, is focused on understanding bank capitalization, rights issues, and opportunities for investors. Now, I guess it's obvious that we're in a season where bank after bank is approaching the markets to raise capital for a wide range of reasons, including to meet the regulators' requirements. So over the next 12 to 15 months, I imagine that we're going to see more and more of this. And so I think today's event is very apt in educating and enlightening investors on rights issues specifically and the opportunities that exist around them. We're delighted to have you all join us. And I know the numbers will continue to grow as we progress in today's event. I see we have well over 100 people already join us so far. And we're going to have a range of very distinguished speakers and panelists who will be giving their perspective on this topic. And we'll be happy to take your questions later on. And as you do so, I want to encourage you to please use the Q&A field on the platform to as you share your thoughts, and not the chat field, as your questions may get lost in there. All right, so let's get started. And to do that, I'm going to introduce our first speaker to deliver some welcome remarks. He is Mr. Olusegun Owadokun, the Deputy Managing Director at Coronation Securities. And it's over to you, sir, for your welcome address.
Thank you, Wale. Thank you so much for that introduction. Good afternoon, distinguished guests and our attendees. Once again, my name is Olusegun Owadokun. I'm the Deputy Chief Executive Officer of Coronation Securities Limited. Permit me to use this opportunity to express our gratitude to all of you for accepting our invitation and taking time out of your very busy schedules to be here today to participate in this webinar. At Coronation Securities Limited, we are deeply committed to fostering thought leadership and facilitating discussions that empower individuals and businesses alike in various sectors of the economy. Through our webinars, we strive to actually provide valuable insights and practical guidance to our esteemed customers and stakeholders. It is actually my great pleasure to welcome you to this edition of our webinar series, which will uplift theme understanding bank recapitalization, right issues, and opportunity for investors. It's uplifting that topic because it has been a very topical issue in recent time. Just like what they mentioned, there will be a series of capital raised by banks following the announcement by the Central Bank of Nigeria for banks to shore up their capital. So in today's dynamic financial landscape, the importance of robust bank capitalization cannot be overemphasized. As we navigate the complexities of the global economy, it has become crucial to understand how mechanisms like right issues play a very pivotal role in strengthening financial institutions and also ensuring overall financial stability. In today's session, we will actually delve into the various aspects of bank recapitalization, exploring how it serves as a cornerstone for financial resilience. And again, we are very privileged to have a distinguished lineup of speakers who bring extensive experience and knowledge and expertise to enrich this particular discussion and topic. We are delighted to introduce our keynote speaker in the person of Dr. Oke Umano, who currently the Chief Economist at the Securities and Exchange Commission, SEC, Nigeria, who is going to be sharing his insight into the critical role of bank adequacy in today's financial sector. Along with him, we also have two distinguished panelists, Mrs. Bolande Adekoya, partner at PwC and head Capital Market Accounting Advisory Services Practice for West Market Africa, and Mr. Ayokunle Olubumi, who is currently the head Financial Institutions Ratings at Augusto & Co. Our panelists will provide their expertise on the implications of right issues and other capital raising strategies, engaging in a very lively discussion on how these various strategies and tools will contribute to financial market stability. Whether you're a finance professional, investors, or someone keen on just understanding the intricacy of financial market, this particular webinar will equip you with the knowledge to make informed decisions and better understand the factors that underpin a stable financial environment. Once again, I would like to extend my heartfelt appreciation to all of you for joining us today. Your presence is a testament to your commitment to enhancing your understanding of this vital topic. I hope you find today's discussion very useful, insightful, and enriching. Thank you once again for joining us. And I will hand over now to Wale to continue the proceedings. Thank you, everyone.
Thank you very much, Shegun, for that welcome address, clearly capturing what we hope to achieve with today's engagement. Very dynamic global financial market, as he rightly pointed out. And as he also pointed out, for whatever reason you might be here as an investor who is looking for opportunities or just to get informed, I believe that you will be covered in all the conversations that we'll be having today. So let's get right into it as we go into our keynote presentation. And then right after that, we'll go into a panel conversation where we will now take questions from the panelists. And then, of course, we will now address questions to the panelists. I will address some, and of course, we'll open this up to the audience to type in your questions in the Q&A field, as I mentioned earlier. And we look forward to getting your questions and engaging the panelists. I see some have already started typing in. I guess perhaps that is an attempt to make sure that your question is covered. We'll do our best to cover all questions. So on that note, I'd like to now invite to deliver his keynote presentation, Dr. Oke Omeano, who is the chief economist at the SEC Nigeria. He oversees research, risk management, and policy management and international relations at the SEC. And prior to joining SEC in 2016, he spent 13 years in various roles at the Central Bank of Nigeria, including helping manage tens of billions of dollars in reserve assets. He holds the CFA charter and is also a fellow of ACCA. I'm now going to yield this virtual stage to Dr. Oke Omeano to deliver his keynote presentation. It's over to you, sir.
Thank you, Wale, for that kind introduction. You're welcome, everyone. Let me quickly share my screen. I have a few slides to share with the house today.
Yes, we see it.
Yeah, thank you very much. Welcome, everyone, to today's event. I'll be speaking about bank recapitalization and with a special focus on rights issues. And just I'll try to expose the opportunities that investors have in it. And we all know that we have a strong banking sector. I mean, when you compare it to the rest of the economy, it's quite strong. The structure is that we have what we call deposit money banks. The central bank calls them that, and what the rest of us know as commercial banks. And you know, they are segregated or they are segmented according to size and reach. We have the DSIBs, that's the domestic systemically important banks, and the international banks at the highest level. We have the one; those are the international ones. We have the ones that have the national coverage, and then the regional. So we have them in different segments, depending on size and the kinds of business they do. And they've grown over time. These banks have grown. Their performance has been good. They've consistently done well for many years now, if not decades. And they are guided by a very strong regulatory framework by the central bank, underpinned by the Basel Accords. Now, for our banks to really support the economy in the way they should, they have to be strong. And when it comes to banks, the strength is usually measured by the amount of capital the bank has. So it's important that our banks have, adequate capital, not just for risk management, but also for them to be able to compete. It's a small world, and our banks have to be able to compete. So yes, capital is an indication of strength of a bank. It also enables, increases lending capacity. The more capital a bank has, the more likely it is that they can mobilize funds which they can on lend. So yeah, it increases the lending capacity. And then I've talked about risk. Everything around the Basel Accords and risk in Basel Accords revolves around the capital. We have the capital adequacy ratio tied to the risk-weighted assets of the bank and all that. So basically, the number one risk banks face is credit risk, and it is capital that helps mitigate that risk. So that's why it's important for bank capital to be strong. And then, of course, regulators try to enforce this. So to recapitalize means to comply with what regulators want. This is not the first time we are asking banks to recapitalize in Nigeria. We did that in 2004, 2005. And we saw the effects towards the end of that decade, 2007, 8, 9. We saw that there was a sharp rise in the domestic credit to the private sector by banks because, of course, they had more capital. They went from 2 billion. The typical bank went from 2 billion to 25 billion. And that sort of gave them more strength. At that time, the weaker ones, fell off. There were mergers, there were acquisitions and things like that. But we emerged with strong banks. We had 88 or thereabout before that exercise. I ended up with 25 that were quite strong. And we saw it in the ability of the banking sector to support the rest of the economy. Now, one more thing that happened was that because these banks were able to raise capital, we began to see more companies, having higher capital in the exchange. Now, not just the banks, but we also saw a rise in general or average capitalization of companies in the market, especially in 2007. We saw a dip around 2009, during the global financial crisis. But after 2010, it started going up again. If I were to stretch this graph to today, it would be a lot, but I just didn't want to because that would shift the focus from what we are talking about. So what I'm trying to point out here is that recapitalization of banks has been good for the economy. Okay, so that's why many of us support this latest one. And then one more reason why I also think that recapitalization is important is good for us at this time is that we don't have banks that are strong enough or big enough or large enough to compete fairly or to compete to have competitive advantage, over the largest banks in Africa. If you look at the first 10 largest banks in Africa by Tier 1 capital, Tier 1 capital is equity assets and retained earnings of banks. If you look at that ranking, you will not see any Nigerian bank. If you look at the largest bank in Africa, Standard Bank, this bank has over $200 billion in assets. How does a Nigerian bank that is, that doesn't even come near such amount in assets, really compete with such a bank? So we have to Nigeria is one of the largest economies in Africa. There's a lot happening in Nigeria. Our banks have to follow suit. Our banks have to be able to support the economy. So this is just to show you this. And then the central bank came up in towards the end of March with the new capital requirements, and they are quite they are quite difficult for the banks to meet. Let me put it that way. It's a very high jump from what it was. So for the international banks, we went from 50 billion to 500 billion, about 10 times. National banks, about 8 times. The regional, 5 times, and all that. So we had quite a high jump for these banks. But if you look at it in dollar terms, the 500 billion we're talking about at 1,500 is just about $300 million. So you have to look at it that way. We expect our banks to compete internationally. I'm always happy when I travel around Africa and I see some of our banks, they are strong in those countries. But how can they compete if they are undercapitalized? So these are the new requirements. And the central bank gave 2 years, 1st April 2024 to 31st March 2026 for these banks to meet this. And central bank went further. defining what the new capital should be, what form of capital is acceptable. Okay, the central bank said it's only share capital and share premium. They will not accept retained earnings. Remember, I talked about tier one capital earlier. Retained earnings is part of tier one capital, but the central bank said the banks cannot use retained earnings. If you notice, towards the end of, in last year's results, many of the banks did well because of the Naira that lost value. So anybody who had FX assets, automatically had some, profit. Central bank specifically want that that profit should not be used for this. So in other words, what the central bank is saying is that we want new capital in the industry. So a few people, argued against it and all that. But if you look at the reason for the capital raise, for the recapitalization exercise, it is for new capital to come into the industry. And the central bank is right in restricting, excluding, I would say, retained earnings. Also, bonus shares are also excluded. You cannot, if you had any reserves or any retained earnings, you cannot pay it as, give people bonus shares and convert it into this capital. So that's also not allowed. So that has made it become that these banks have to find external sources of financing. Of course, the central bank doesn't allow debt as a way to finance capital. So, and the central bank also said that in doing this, they have to still maintain their capital adequacy ratio. You know how capital adequacy ratio works? It's based on the risk-weighted assets, which even makes it almost impossible for debts to be used. So this is a composition of this new capital. So if you look at all the things that the central bank has put around this new capital raise, you know that the capitals, the banks really have to hit the market. Okay, so KPMG study shows that with this new capital raise, there's a bank capital shortfall in Nigeria of 4.2 trillion. And that means that banks in Nigeria to remain as they are. I will soon talk about the options that they have, but to remain as they are, for us to have the same number of banks doing the same kinds of things, 4.2 trillion naira has to come into the industry. This is a large amount of money. Okay, so what are the options? What are the options available for banks to raise this capital? So there's of course, the option of public offering. For those who are already public companies listed, they can do public offerings. For those that are limited liability companies, they can do their initial public offering. There's also the private placement where the banks can actually find, institutions and high net worth individuals and, place equity there and get some funding. Then there's a rights issue, which we are going to home in on soon. And there are mergers and acquisitions. Banks can merge and come together to, become one, or a bank can acquire another and they pool their assets to, hit that target. There's also the capitalizing of dividends. And here we have to be careful. The only way banks can do this now is to pay out the dividends to the investors and urge or encourage or advertise or promote or whatever, convince the investors to buy the bank shares with these monies. So the banks are not allowed to just pay what we call in Nigeria audio dividends and now turn the money for dividends into assets. So that's another area. And then the other question is, do they have enough, to pay? Do they have 4.2 trillion to pay out as dividends for that money to come back? And will all that money come back? So these are the, hurdles that are there. And then we also have convertibles. Do they have many convertibles? I looked at the figures and I saw that we don't have too many convertibles. We don't have convertible debt that can be converted to equity to raise this kind of capital we're talking about. So that means that the banks are left with three things, or four actually, that are viable: public offerings, private placements, rights issues, and mergers and acquisitions. So these are the ones that are there for them. Of course, all of them have their advantages and disadvantages. But for the purpose of today, we are talking about rights issues. So let's move in on that quickly. Of course, what are rights issues? It's just a way of raising capital from existing shareholders, from existing equity holders. Okay, so you're not inviting new people, except if those existing equity holders do not want to take up the rights, they have the opportunity to sell those rights. There are options. So a right is an option. So if I don't want to take it, or I don't have the money with which to buy up that, I can actually sell that option. So what basically happens is that the new equity that comes in, the new shares that comes in, is proportional to what already obtained. And in theory, if every shareholder takes up their right, then the bank will end up with the same shareholders. So that's what happens. But that never, that's what should happen theoretically, but that never happens because, people have different reasons for holding equity. So some people will definitely sell their rights. And what does it do generally? It allows issuers to strengthen their financial position without really diluting the holdings, of people who are already holding the shares of that company. Okay, and then it gives opportunities for investors to increase their stake in the company. Stake in terms of number of shares, not in terms of the proportion of holding. And from data that the SEC has, at this point, let me just do a disclaimer. This every view I express are personal views. I haven't been mandated by the SEC to speak to them in official capacity, to speak for them in official capacity. So I'm just expressing my own views. But from data that the SEC has, rights issues have been a popular choice for raising capital. So I looked at data over the past 5 years, and if you look at the crimson, or is it red? Let me call it red, colored bars. You will see that in 2019, rights issues were the number one method of raising equity capital. 2020, the same. In 2021, not so much. In 2022, rights issues were number one. In 2023, rights issues were number one. So out of the 5 years I looked at, 5 years back, rights issues were number one in 4 of the years as per methods of raising equity capital in the market. And then when you go to, that is for number of transactions. When you go to, value, it's still the same. Rights issues are not doing so badly. If you look at 2019, they are up there just beside the initial public offerings, because that was the year we had some big public offerings, the telecoms companies. And then if you go on to 2020, you see rights issues were up there too. 2021, not so much. 2022, not much activity in the market. But this year, last year, sort of 2023, we had rights issues up there again. So this is just showing you that rights going on. Why would a bank opt for rights issues? Why would a bank opt for rights issues? There are many reasons, so I just thought to mention 1 or 2 of them. The first one is the cost is lower, generally lower, not from the point of view of the fees paid, or the parties to the transaction, but from point of view of advertising. Most of the time, when rights issues are there, one is actually speaking to the converted, preaching to the converted. You're talking to people who already have expressed confidence in the company by holding the equity of that company. So it makes it a bit easier, to market. And then, of course, people have the opportunity to maintain their ownership the way it was. The register is easier to manage because basically you don't have too many new people coming in. And of course, when you start with a rights issue, even if it's not successful, what do I mean by successful? You don't raise all the money you want. You can actually go back and do a public offer afterwards. So we've seen it that after a rights issue, many companies still go ahead and do a public offer when they don't get all the money they want. So that option remains. And what are the advantages? I'm aware there are many investors here today who are thinking about it. Of course, you have your normal capital gains that you can get from owning additional shares, but then you maintain your ownership. That's important. If it's something, a company you've already, expressed your confidence in, you want to maintain that ownership, and then the rights will help give you that opportunity. Sometimes the rights are, priced below the market. Most times they are priced below the market. So it's an opportunity to get something undervalued, because by the time it goes out to the public, it becomes more expensive. So that value can be captured at that point. And of course, it helps your company, the company you own, to maintain their financial stability. Of course, there are risks. Like any other investment, there's a risk of market volatility, prices going up and down. There's also the risk of the performance not being not continuing as you expected when you bought the rights, when you took up your rights. So, and then there's also that dilution of shareholding. I mean, if you don't take up your rights and you sell it, then new shareholders are going to come in, and the proportion you had will no longer be the same. So this is from the point of view of the investor. However, what does the investor do? When this kind of opportunity comes, the best thing to do is to analyze it. So analyze it vis-a-vis your portfolio, analyze the statements, analyze the reason the organization, the bank, is raising that financing, okay, and what they expect to get. All this will be in the offer documents, in the documents that will be sent to you. Take time and read them. Look at the group potential and look at whether that bank is undervalued. I'm one of the people who believe that many companies on our market are undervalued. Okay, if you look at P ratios in Nigeria and compare it to P ratios outside of here, you will know what I'm talking about. Okay, so generally you have to assess it the way you would assess any other investment. So time the market. Most times these issues, are restricted for just a short time. Understand the offering. Understanding the offering means reading the offer documents and then think in terms of diversification. Because one of the things that happens when you invest when you take up your rights, is that you concentrate your portfolio the more. So have that at the back of your mind. How much is your portfolio taking up these rights? What is the implication? So you need to look at that also. Now, I will come to the final part of my presentation this morning, and it's about the regulatory oversight. In this particular recapitalization exercise, the SEC and the CBN are working together. Of course, the CBN regulates the banks, the SEC regulates the capital market. There's that handshake between these two organizations, and they are aiming to come up with something, an exercise that is efficient and achieves the goal. So in this recapitalization exercise, we expect things to work faster and better than it did in 2005. One of the reasons is the offers are mostly electronic now, if not all of them. And then there's the regulators have also decided in-house to reduce the time it takes between when the offer documents are filed to when they are approved, and even when allotment is done. So there's going to be improved efficiency. I'm sure we're all seeing it now already, those who have started investing in these things. And then there are investor protection mechanisms. That's why I talked earlier about transparency. I'm going to talk a bit more about it. Transparency and disclosure. The offer documents insist that anyone who wants to issue these securities must disclose every information an investor needs to make an informed decision. This is transparency, and all investors have to get that information at the same time. There cannot be favoritism in terms of disseminating this information. This is very, very important. And then investor education and awareness. The SEC has encouraged capital market operators, and I know that the CBN is also encouraging banks to do a lot of investor education. Thank God Coronation is doing. Thank you, Coronation, for this. This is one of the, this is an education and awareness event. So this is happening. I will just home in a bit on transparency and disclosure. The SEC requires full disclosure. Full disclosure means that everything about the rights issue has to be, disclosed. There has to be nothing hidden, okay? And the SEC enforces this with very steep penalties when it is not done, okay? The purpose for the issue, the terms, the risks. So the issuers are even asked to include the risks that they see in it. And then there has to be timely reporting. So there are timelines for when the reports must come. There are also strict timelines for when the offer has to be, brought out and for how long and things like that. And then the SEC monitors, religiously. The SEC even monitors post-offer implementation. So if a bank comes and says, oh, we're going to use this money for branch expansion, or we're going to use it to buy this software, or we're just going to use it to increase our investment in XYZ, the SEC will follow up in association with the central bank. The SEC and the central bank, like I said earlier, are working closely together to ensure that the issue proceeds are used as they are said, and as the bank has said in the offer documents. Okay. And then, of course, the SEC also, one of their mandates is to protect investors. So the interest of investors is protected in what ways? In four main ways. There are many ways, but I just picked these four because they are the most compelling. First one is literacy. The SEC is trying to ensure that everyone understands what's going on. This is an opportunity to create wealth, and everybody has to understand what to do and how to make informed decisions. I've said it before, equal information for all. Information has to come at the same time to each person. And then ongoing monitoring, like I've talked about, and then the regulatory landscape has been adjusted. If you look at the FCC website, so a framework has been brought out specifically for this banking recapitalization exercise. So you can look at it. And of course, there are opportunities for all kinds of investors, both retail, high net worth, and institutional. Okay, so there's the advantage that you have. There's an access to growth opportunities. There's potential for high return, like I said before, depending on how the rights have been priced, there can be high return. And then you look at, your portfolio. Each person has to look at his own or her own portfolio based on, preferences or situations and, idiosyncrasies that the person has. Okay, so institutional investors, the same thing. Of course, they have to conduct their due diligence and look at the purchase of the take-up of the rights vis-a-vis their investment strategy. So these are important for would-be investors. Okay, but now what is the role of investment banks or the people we call issuing houses in Nigeria? Of course, underwriting, some of the offers are underwritten, some are not. So these are some of the things that whoever is investing has to look at. Market making, advisory, of course, they advise the issuers, and then there's the legal and regulatory expertise that they bring. Okay, so that's the role these investment banks play. Tax implications, there's really none. It's not different from any other offer. So there's no difference between the tax implications you see in rights issues and in public offers. So it's the same thing. The only thing that happens is that there's a VAT on monies paid to players, professional parties. The fee is paid to professional parties in the offer. Apart from that, there's no tax. So if you're taking up your rights, you're not going to be charged any tax on that money that you are paying. So, and then what's the outlook? I'll end by saying that there's potential for positive growth in Nigeria. And of course, if the country is growing, the banking system is always known to be ahead in that growth. So for Nigeria, there's that potential for growth. There's no other way than up for us. Because if you look at how our economy is, given the size of the population, given the potential, even though we haven't really maximized that potential, but I know that there's that, the trajectory is actually up. And then there's regulatory support for this bank recapitalization. Like I said, the CBN, the SEC, and the entire FSRCC. FSRCC is the Financial Services Regulation Coordinating Committee, which includes all the regulators, the financial system regulators, FIRS, CBN, NDIC, SEC, PENCOM, NICOM, all of us, FRC, all of them together are supporting this banking recapitalization. And there are investment opportunities being given today for people to own parts of banks which have done well historically, like I said. And then this recapitalization will improve the stability in our banking industry, just like how the former one did. So at the end of this exercise, it is expected that our banks will be able to do better, do bigger business, will be able to spread more across Africa and even the world, and actually have greater impact. So in terms of takeaway, I would say that this is a growing sector. It's still growing, even though it looks mature, but it's still growing if you look at it. There are still many people queuing up for banking licenses, and those who have got it are doing quite well. Most of them are doing quite well. And it's an investment opportunity, and it's going to increase economic growth in the country. So I would end it here and hand over back to Wally. Thank you very much.
Thank you very much, Dr. Oke, for that very comprehensive presentation that really captures the theme of rights issues, especially in the context of Nigeria. Thank you so much for that. And
thank you.
Now we are going to pivot to a panel conversation where I would invite some other speakers to join Dr. Oke to unpack this theme a little more. And I can see already that we have quite a number of questions on the platform. So thank you again for sending your questions. We're going to do our best to get to all of them. So I will begin by inviting the Deputy Managing Director of Coronation Securities, Mr. Olusegun. He spoke earlier, and I would like him to also participate in this panel conversation. So, Mr. Owadokun, please, if you would join us for this. Then I would also like to invite Bolanle Adekoya, who is partner, PwC. She's the leader, Capital Market Accounting Advisory Services for West Africa. And she's joining us virtually as well for this. Thank you so much, Bolanle, for your time. And
thank you. Good afternoon.
Last but certainly not least, we have Mr. Ayokunle Olubumi. He's head financial institutions ratings at Agusto & Co. He will be giving us a credit ratings agency perspective to today's discussion. So, ladies and gentlemen, thank you so much again for your time and for joining us for this interaction. So, I would like to perhaps go to Bolanle if we can. We are in the capital market offer season related to banks, and rights issues have dominated that issuance up to this point. But if we can start by just getting from you, just your perspective overall on what should investors look for in a bank recapitalization plan to determine if it's potential success, and to try to determine its success, and then of course its impact on shareholders' value.
Thank you.
That for us first.
Yes. No, thank you for inviting me, and I'm glad to be here. And the truth about it, and sort of understand why you're also doing the investments. It's important that people understand when you have decided to go into a capital market is a long-term play. So if you're looking for short-term gains, maybe it's not for you. Maybe look at mutual funds, maybe look at FGM bonds. But when it comes to the capital markets, when it comes to equity, it's a long-term play. You need to look at the bank's track record, maybe look at how they pay dividends, how they've the other plays they're making in the markets, and their growth trajectory. And because they're listed, you have a lot of that information available to you. You can pick up their financials and see what they're doing. And if it's something that you believe in, you can do that. The other two things I think it's important to mention, because it's interesting sort of seeing some of the questions that are coming through, is that even as an investor, you have to also educate yourself about the history of our capital markets. So because the Nigerian capital market is not as deep as we want it to be, sometimes some of our companies are undervalued, and that is one of the things that you need to look at. So when you have companies and going that, and they're coming up with sort of slightly higher prices, a lot of it is signaling confidence, and also it's representing the real value of the actual organization. And when you look at things around the rights issue also helps you in such a way where you are reducing dilution. So it is value to you as an investor, where you are able to participate in the rights issue. You're not diluting your shares in that sense. So it means that when it comes to dividends later, you get long-term pick. So those are the things I will say, at this stage, because also, apart from the financial strength that we know that it does, but it's important that people also educate themselves on why they're doing this. Thank you.
Thank you very much for that, Bolani. And we will certainly unpack some of the points you have made so far. And we continue to see the questions and we're coming to them in a moment. But before we do, I want to go now to Ayapole to give his thoughts on something that I think perhaps will help us better understand all that is going on. So, in your view, what are the primary methods banks can use to raise capital? And how do these methods differ in terms of risk and return for investors? Is there any difference? Because we know, for example, there's the option of an IPO, a public offering. So tell us about how all of that differs in terms of risk and return, if there's any difference in relation to a rights issue.
Thank you very much. Thank you for having me here. And just to jump into your question, like you mentioned, and I think like Dr. Oke mentioned during his presentation, there are different ways in which banks can actually even raise capital. I think the one that banks actually prefer is organically growing the capital base, which is through retaining your profits. And that's why you see some banks, they are very profitable, but they're not distributing dividend, right? Even the shareholders are saying, look, don't pay us dividends, right? That's a way of even raising capital. But like we all know, right, from this exercise, retained earnings is excluded, right? So it won't be a source of capital for a particular bank in this particular scenario. So the first one is one we're here, which is the right issue. And rightly said, the beauty of right issue, right? I love the way Dr. Oke mentioned is you are preaching to the converted. You're already talking to the shareholders. And the time frame is relatively short. You don't need to make any, you are not saying any big grammar, talking to any, you're not doing anything within yourself. Particularly if it's a closely held company or a closely owned bank, just a few shareholders. And the beauty is that you are not diluted, right? All of you know yourselves, and each of you will participate in the growth of the bank in the future. Another way that we can actually even raise capital is through private placement. Here, you invite some investors for them to bring their funds, for them to join the train, for them to join the party. Here, you are not opening it up to the whole investing public, just a few investors. You realize that the cost of raising this capital is going to be relatively high compared to the private placements. Because, of course, you say you have to do a lot of roadshow at times, you need to do a lot of explanation, some of them will even give you some condition before they even invest in their funds there. One of the major risks there is that, look, you're going to get diluted. So meaning that, for instance, assuming that before you held 20% stake in that particular bank, after that round of investment, you might end up having sometimes even as low as 5%. So meaning that whenever there's actually any dividend distribution, you are getting a lower share of that particular pie that is being distributed, right? And then the other risk there also is that, look, you have your risk that you're bringing somebody that doesn't understand you properly. You know that before you guys are just a group of shareholders that you own this particular bank, you can bring an investor that will even, that doesn't even think the way you guys think, right? That will make things difficult, right? And also when you have more shareholders, reaching a decision at times can be a bit more complex and can be a bit more difficult. And then another way in which you can actually raise funds is IPO, initial public offer, right? Or you can even say, if the bank has been listed before, let's just call it a public offering, in which you are opening it up to the public. Everybody come and participate in this particular option. And this is very expensive because here you are going to do a lot of try to talk a lot to a lot of investors. It's going to actually cost the bank a lot. And in that case, obviously you realize that, look, in terms of risk, the risk is relatively high, right? Because one, you are bringing diverse set of investors. And even at times, you had 60% stake, you can wake up one day and realize that, look, you have less than 5%, right? And at times, somebody else can even take over that particular company. Although the risk is higher, but one of the beauty of IPO is that you realize that the level of disclosure that you need to make as a public document, as a public company, is higher. So you realize that even when you guys are few, there's some information that is going to be very difficult for you. But as a public company, you need to disclose information. At times, some of them even go to the extent of even having quarterly and even periodic call with general public, the investors. You can ask how the company is being run, right? That one can also even cancel even more. Of course, there will be dilution, right? You are getting a lower pie of that particular stake. However, another way to look at it is, look, is it better for me to own a big size of a small fish, or you want to have a small size or a very large enterprise? So there are different options depending on what the bank is looking at. And then given the size of how much that will be raised, we believe that about 4.3 trillion will be raised through this exercise. You see that a lot of banks are going to use a combination of these methods to be able to meet the regulatory requirement. Thank you.
Thank you very much for that contribution. And I would like to now go to Dr. Oke to very briefly comment on what happens after the rights issue is approved in terms of the SEC's oversight. How does the SEC continue to monitor the bank's use of the capital raised to ensure that it's in line with the proposed objectives? You did mention this in your presentation, but maybe I was also hoping you could illustrate in a more practical way. Is this a case of how do you investigate
It's
that?
quite easy. It's quite easy when it comes to banks. Generally, when anyone raises funds through the capital market, the SEC has an office, a unit that the job is to monitor use of proceeds. So whether it's a state, is a company, is a bank, wherever. But for banks, it's quite easy because, like I said, the SEC is very close, I would say, to the central bank. And the central bank is the primary regulator. So the SEC just gets that from the central bank. But the SEC and central bank conduct joint inspections. They share information. So that's why I said for banks, it's easy. But when it's states, what the SEC does, for instance, if a state comes to the market and says, we want to build a bridge and we're raising X amount of money to do it, the SEC gets, before they even approve that offer, there are milestones. They have to submit those milestones. So every time a milestone is reached, the state will invite the SEC to come. So it's the same with the banks. The only thing is that it's easier for the bank to do with the banks because the CBN cooperates with the SEC.
Thank you very much. Okay, I would like to now go to Segun. And Segun, this time I'm going to send you to the Q&A field because there are some questions that are brewing there that I think perhaps you are in a better position to comment on. So let's use that as an opportunity to take a look at some of them. Now, one very common theme is on the issue of the pricing of the rights issue, especially in the Nigerian context right now. We have a case where in some cases, the right price is actually higher than the market price. And as we know, one of the reasons for that is because the market price is dynamic. And so it has actually over time fallen below the right price. So perhaps you can explain why that is the case, because I know from history, this has not always been the case. There was a time when during a public offering, the stock exchange would freeze and place the share price, I think, described as technical suspension, but that's not happening anymore. But now we have this scenario where people have the option to either buy it at the market or to buy the rights. And then, of course, there's the issue of trading rights. So I think there's a lot to unpack there. So I'll just yield it to you to comment.
Thank you so much, Wally. Yeah, it's a very a question that has many parts, and I'll try my best to try and break it down in a very simple language so that our audience and attendees can understand this. First, you bring the issue around why first there is a concept of price and value, and I think Mrs. Adekoya also alluded to that when she was making her remarks. And people need to understand that the capital market, there is what we call volatility of the market. Market moves up and down, and prices are usually determined by the expectations of the different investors that participate in that market. And what their expectations in terms of forces of demand will determine price. But that is different from value. So the value you as an investor will place in a stock might be different from the price that is currently in the market. And that is why you see that stock market prices go up and down. It goes in circle. For example, and this is not the first time, for example, that companies will come out to raise right and do it at a premium. This is not the first. It has happened in the past, and there is no regulation that says the right price must be lower than, even though in common practice, usually at a discount. But that brings us to the concept of price and value. what is the value you are placing on the stock? Some of the stock prices can go up as high as 100% and can come down. At the end of the day, as an investor, what value do you place on that particular company? And just like Mrs. Adekoya was saying, the stock market is a long-term play. It's a long-term play, I repeat. So whatever value you place in that company, you also look at the track record of that company. Will you be able to participate in the future growth opportunity of that company? What is the level of their dividend history? Then that is what is very important. And you need to understand what is your investment goal as an investor. When you are going to be investing in a stock, what you have to look at, what is my return objective? What do I really want to achieve here? Am I here for the short haul or the long haul? And do you believe in the track record of this company? And this is a company that has the potential to continue to grow and to continue to deliver dividend and good returns. Because there are also two ways you can benefit from investing in stock as opposed to other kind of instrument like debt. For equities, you have either the opportunity to benefit from the dividend, future dividend payment, or also from future price appreciation. So if a stock is even currently undervalued, then that means there is that potential for future price appreciation, which will benefit the investor ultimately. And Dr. Oke also alluded to the fact that a lot of Nigerian banks currently are even undervalued, because when you look at some of those valuation metrics that you use, you realize that quite a lot of them are undervalued. I'm a bit not, I will not want to go into technicality to start talking about valuation metrics like PE ratio, even when you look at price to value and all that, because this is actually to educate the ordinary investors so that we don't complicate matters for them. But another part of the question is the fact that the Nigerian capital market is trying to also evolve so that we can develop and compete. Okay, mentioned the fact that we banks need to compete internationally. And if we want our capital market to also compete internationally, we need to also begin to inculcate best practices, which is why currently today, as you mentioned, there is nothing like technical suspension. In the past, when you are going to be raising a right issue like this, the Nigerian exchanges will suspend that stock and say, placing on technical suspension so people cannot participate. But we are supposed to go past that, because we need to develop the market in fact of even derivatives. For example, the right issue we are talking about is actually a derivative instrument. Okay, also mentioned that it's like a call option. That right that has been given to the shareholder is a right on the underlying asset, that company that are going to buy. And I'll call it right because it's an option. It's not an obligation. You have the right, you can exercise that right if you believe you are incentivized to exercise it. And if you are not going to exercise that right, you also have the option to say you are not doing anything. But there is also the layer which differentiates it from a normal stock option, is the fact that the investor or the shareholder has the right to also trade that right and also make some money for himself. So you can actually decide to trade that right. If you feel that the price is not right for you at this point, you have the opportunity to also trade the right by making sure that you approach your stockbroker and say, okay, and that form, you fill what we call the renunciation form. You can decide to take partially your right, fill your renunciation form, and the stockbroker will guide you on the process of how to actually ensure that you make that your right available for trading on the Nigerian Stock Exchange. And at every day, there is a right price, which is also defined by the forces of demand and supply. And at that point, you can actually, instead of saying you are not taking your right because of you feel the price is not right for you, then you can actually trade it. And there are different reasons, motive for people for investing in a company, for dilution and the rest. I think I'll stop.
If you can stay on that, thank you for that. But if you can stay on that point towards the end you made about trading your rights. So let's look at the scenarios now. First of all, why trade your rights? Perhaps you can run through the reasons for that. And then also, given the situation we have now, in some cases where the rights price is actually higher than the market price, is that still an option for someone who is looking to make the most of the rights offer?
Yes, thank you so much. Yeah, and let me just elaborate further on that. Now, once the right opens, what the NGS also does is to also set the right price on the exchange, especially in the case of a right that is issued at a premium. If it was the other case, maybe at a discount, there's what we call the theoretical price, which is determined using some formula to determine what the right price is. But in this case, because it's issued at a premium, what the NGS will do is to actually set what we call a notional right premium price. And that price, once it's set at the beginning, the forces of demand will evolve over the duration of that right period, will evolve and it changes. So in the case of, for example, Access Bank, the notional price was 1 kobo when it began. And I think as at close of trade yesterday, I think this hovering around 2 kobo per share. So what that means is that if as an investor, you say you are not going, you do not want to take up your right, there is that option for you to say, I want to trade my right. Trading your right means that you want to sell it. In fact, right is just like a normal stock, really. The only difference is that right gives you opportunity to buy the underlying as a stock or asset.
I guess the term is derivative, right? It's a derivative of the stock.
Yeah. So it's actually a stock, but yeah, say I want to sell it. Just like the same.
Still an instrument you can either buy or sell.
And there's the other party too, because there are some buyers, and that right, one of the important benefits of even right trading in this instance is that why we say that right issues are for existing shareholders, because there is that opportunity for us to also engage in trader right. It also affords opportunity for the shareholders that are not currently shareholders of the particular company to actually partake in the right offering, because all it means is that there is a seller, which is the investor that want to trade their right, and there is the other party that is a buyer that might be interested in actually buying the right. So it means that what that gives is that the opportunity for investor generally to actually partake in the right offering. Unlike if there was no avenue for trader right, so they will not be able to participate just for existing shareholders. So, but this has created an avenue for investors generally to actually partake in the right offering because of the opportunity for them to engage in trader on the Nigerian Stock Exchange. Thank you.
Thank you very much for comprehensively handling those issues. I imagine that quite a number of questions already have been answered just from that short monologue by Mr. Owadoko. All right, let's go back now to Mrs. Adekoya. And I just wanted you to give your general view, because you've had so much experience with corporate issuers. You've seen you've seen a lot of trends in terms of cycles, in terms of corporate Nigeria and the banking sector in particular. How do you assess this opportunity that we are seeing, that we're going into, for banks to issue new capital, many of them using rights, and then also for the investors? Is there what's your overall perspective on this season? Because I think that investments happen in an environment, right? The environment could be either supportive or not supportive of new investments and investment opportunities. So I just wanted to hear your perspective on how you gauge the current environment.
Okay, so I'll take it from two angles. The first one is about the opportunities. Let's be honest. We need to do more just generally with regards to our capital markets. And this banking recapitalization is actually an opportunity for us to be able to kickstart activity in our sort of a bit of shallow market as we have it. There's a lot that's been done around policy and reforms to encourage people to invest and do a lot of education around it with the NGX and the restructuring, getting involved. There's a lot of things that are done. But in other countries, you will find that, the capital markets can contribute up to 32% to the GDP of the economy. At the moment, Nigeria, I think it's maybe like 2%. In Africa, when you look at Africa, in other places, you're finding between 9% and 13%. If you look at somewhere like South Africa, and actually, South Africa has even gone in for doing more. In other places like India, in UK, there's a lot more. So the capital market is actually a great way to grow wealth. And this is an opportunity in that sense. And if you notice, if you look at the market cap of our stock exchange at the moment, and you look at least maybe 5 out of the 12 banks that are listed, those actually hold quite a big weight, apart from maybe the FMCG companies that are there. So it's an opportunity for us. So I think it's a great way. The other thing that it also does, in a sense, if you notice, in the last 3 years, we've had a bit of a lull with regards to foreign investment, because that's where the other angle I look at it, as in fact that Nigeria we have our issues, let's be honest. And if inflation being very, very high is affecting the value of the naira, but it's also making us slightly cheaper for those foreign investors that are coming in that sense. But it's also an opportunity for those companies, especially the bank, to be able to make sure they're able to maintain their capital, work on things around their risk management, work on things around the growth. So let's do proper banking, not just retail, so that we can actually grow and kickstart a number of things for us as a nation. There's a lot of support and investment that we need around infrastructure. So the proceeds that actually come in can also then be used in a sense to help kickstart some of these industries. So it's not, so there's actually, you know, down the line, it has a lot of good things that will come. And if you remember from Dr. Okay's presentation as well, when you think about what happened in 2005, when the consolidation that happened to help deal with it, yes, in 2008, there was a bit of an issue around the capital markets in that sense. But if you look at it, the financial services sector, financial services in Africa, even in the world, we are actually very, very strong. So it's an opportunity for us to be able to kickstart there. Of course, there's that high exposure on, you know, Forex, which is one of the reasons why a lot, if you notice, a lot of the banks are focusing on local investment instead of having to go out to be raising bonds and all that. So that's also a good thing, actually. So even though there's a negative part of it, is actually, I see it as a great opportunity for us, because even the pension funds, so that's where regulation comes in. I think the pension funds also, you know, they have a massive pot that they can invest in there, but a lot of them are afraid because of the fact that interest rates are high. And when you think about risk-free returns with regards to the FGN bonds and treasury bills being quite high at the moment, people always think about risk return, go for the lowest, we can still get a high return. So we really need to work on those percentages, even at the CBN level and even at our inflation level, so that we can work on that. The last thing I'm going to mention as an opportunity is that as these investments are happening, if the banks are not be able to make up those new capital in a sense, they will need to go out and look at other ways of doing it, whether private placements, which of course then will force things around a bit more corporate governance, strengthening that may have to happen in that sense, and help with regards to making sure that investor confidence is high, that even no matter what is happening in the economy, we know that our financial services sector, which the CBN is really, really helping, is actually holding strong in that sense as well. And, you know, rights issues in the past, if you think about other banks, it has always been quite successful, just generally, because as I said, the banking sector has actually had a very good track record of keeping with regards to paying returns and growing. It's just that we need to get the trading going. So the likes of this new IPOs, the rights issue would actually help kickstart and stimulate the market, which is a very, very well, you know, it's long overdue and it's needed at this time. So hopefully I was able to answer your question. Thank you.
Thank you. I think you shared some valuable points there, and a lot to think about in terms of the environment right now. But if I can ask a related question, and this time posing it to Dr. Okay, in terms of the efficient and optimal deployment of the capital raised. Now, we know a rights issue is essentially an offer to existing shareholders, so an opportunity for them to invest more in the businesses they own. And the big question is whether or not it's a good investment or not. And I just wanted to hear your perspective on that, how you assess the opportunities for banks to deploy this capital in an efficient and profitable way in the current environment. And can you just speak to that in your view? Because you already in your presentation suggested that that is the case, that they have the opportunity.
Yeah, thank you, Wale. Before I answer that, I wanted to add to what Segun said. Many people are asking about the premium on the rights. Let's also remember that in addition to what he said, there's that issue of liquidity. You may want to buy 100,000 shares. They are telling you the shares are sold for 18 naira. You put in there and your stockbroker tells you I can only buy 5,000. But when you have the rights, you can actually get the number you want. So the price does not represent it represents it in a way, but it's not a direct relationship. So I just wanted to add that. And then to your question about use, like I said before, we have an economy that is dynamic. This economy, a lot of people do not actually give it the, would I say, the accolades or place it where it should be. We have a very dynamic economy. The only thing is that the economy is a large part of it is informal. And so we have to have policies to make the economy more formal. But if you look at it, banks have a lot they can do, a whole lot. There are places in this economy that are in dire need of capital. Like Bolanle said, we have to do proper banking. There are a lot of things that need financing, or a lot of areas that need financing that are not presently being financed because maybe they have not been de-risked, or maybe the banks have not shifted focus to them, or maybe there's not enough capital. So I'll pick on that third one. One of the reasons we don't see financing in certain areas of the economy is because the banks don't have enough capital to play in those areas. I'll give you an example. This is a country where people pay for cable TV to watch football. Everybody on the street knows all the names of all the footballers and all the clubs and everything around the world. And there's a lot of value in that. I'm just naming one. And there's not enough money in that part of our economy. If you look at other countries where they have really developed just football, I'm just talking about only football, you can imagine how much value can be unlocked. So, and then we have more things. We are talking about energy, changing our energy transition and all that. All that have to be financed. So I do not think that if a bank raises capital, say, extra 300 billion naira, that they will find it difficult to find where to put it. And then one more thing. Like I said, I have traveled a bit around Africa, and Nigerian banks are dominant in many parts of Africa. And just as, okay, let me put it this way. Many parts of Africa don't have capital. Even as we are saying ours is small, we have more than them. So it's an opportunity to dominate the continent. So there's a lot that banks can use. And if they lack, I do not think that there's any bank in Nigeria that lacks ideas about what to do with capital right now. Yeah, I do not think so.
Thank you for that intervention. There are some questions for you in the Q&A field, and we'll get to them in a moment. But before that, I just want to come to Ayapole to just dwell on the implications of this rights issue for the creditworthiness and stability of these institutions. And clearly, by raising more capital, I imagine that these businesses become stronger. But is there any other competitive edge that you see that banks get from raising capital this way through a rights issue?
Okay, thank you very much. I think one of the first advantage of a bank raising capital through a rights issue is that it helps with governance. Because, for instance, if I'm having private placements, if I'm having a public offer, you're having new investors. The next question is, okay, you might need to reconstitute the board. You need to actually ensure that you guys are in sync. You're already going the same way. So the rights issue, like I said, is very easy. Easier way for you to actually even get those funds on board and even be able to even deploy it. And even at times, you realize that it's easier for the bank to easily talk to the investors, to existing investors. It doesn't cost them so much, right? So you can actually even deploy that particular amount. And also, it will also support the growth of the bank, right? So if you check the banking industry, you see that over the last 10 years, although in naira terms, the industry's capital has grown to 10 trillion at last year from about 3.4 or 3 trillion that we had in 2014. But if you are looking at it in dollar size, we've actually even shrunk. We are barely doing $12 billion, right? Compared to 20 that we had in 2014. And so you also realize that last year, a lot of banks single obligor limits, they actually failed it. Not because they disbursed load, but because of the massive devaluation that year. So you can see that it is imperative. And even by the time you move closer to the banks, you notice that even before the CBN actually declared this recapitalization, a lot of banks are already even planning to come to the market. right? Either
That's
through
true.
rights issue or private placements. So the bank realized that, look, we need to actually strengthen the banking industry, and even to support the plan to grow Nigeria's economy to be a 1 trillion economy in the near term.
Okay, thank you very much. I mean, one of the biggest takeaways from your comments there is this dollar matter it hits us in so many ways. It's causing challenges even for the banks as well. Okay, so let's go to the Q&A field now and take some questions. I'll come to you first, and Dr. Okay, because somebody's asking, Joshua is asking a couple of questions for you. And the first one is, in simple terms, what's the difference between taking up a rights and just buying shares? I think that should be a short answer. But the other question is, if, for example, I have some shares with Access Bank, however, I did not take up the rights, what does that mean for me? So what are the implications for me as an owner or investor in that stock? Then the third one is, does it mean that if I do not take up the rights, I do not get dividends at the end of the year? So just to clarify that point. And there's an example here. For example, Access Bank rights is capped at 1975. However, say the market at the moment is at 1755. Why should I take up the rights instead of just buying more at 1755? So a couple of points to clarify there. I hope you got all of them. The first one is, what's the difference between rights and buying the shares themselves? Is there any difference substantially as an investor?
Thank you, Wally, and thank you, the person who has the question. The difference is not much. I mean, you can go to the floor of the market and buy, but like I said, there's that issue of liquidity. Can you get the number of shares you want at the time you want them? Then if you don't take up your rights, nobody's going to flog you or do anything, but you'll be losing an option. Shegun just told you that you can buy it, you can sell it for 2 kobo. So it has value. It has value. So you can decide to do nothing. But in my view, I would ask that you ask your stockbroker. They will advise you on how to get some value, extract some value from it. Right. And then you asked about dividends. Dividends are not based on whether you bought the shares on the floor or whether you took up rights. They are based on what you have on the day that the dividends are, or the day I don't want to go take about what we call the day, the register is, taken for people who own.
Okay, I think his shot has frozen, but I think he was speaking to the closure date. Perhaps, Shegun, you can pick it up until perhaps he can come back. Unfortunately, we lost
dividends. Yes.
Okay, he's back. We lost you for a moment there, but go ahead.
Oh, sorry. I was saying that it's ownership of shares that allows you to get dividends, not how you bought the shares.
Right.
And I would advise, this is why we insist that if you're playing in the stock market, always get an advisor. Do not just go in and say, I'm buying this, I'm buying that because my friend said, or I saw it on TV and all that. Ask someone who knows. So I cannot advise you now to buy XYZ stock, because to give you that kind of advice, I have to look at your circumstances, what your portfolio is, and all that, and what you want out of the stock price. Well, Alex said it earlier that it's a long play. So the question is, can you do that long play? So, and there are some stocks that don't even pay dividends, and it doesn't mean that they are bad stocks. So it all depends on where you stand. So yeah. I hope I didn't miss out any of the questions.
I think you captured them. Let me go now to Ayokole. Perhaps you can take a stab at this one. This person is concerned about, again, the usage of proceeds. What assurances do investors have that the funds raised by banks from the recapitalization issues won't be used to pay the so-called windfall tax that will soon be imposed on them? So again, the issue of the use of proceeds. You know, Nigerians very, very, very suspicious about people's intentions. So
yeah, lovely question. I think that windfall tax, there's a lot of discussion all around it. But the truth is that from what we've seen, the impact won't be as much. Don't forget that tax is on realized profit, right? And a lot of those funds are actually unrealized. But don't worry, we'll get there, but in due course. And I think also a very, very good question. And I think one thing that we've also seen during this round of recapitalization is everybody's trying to talk about accountability. I'm sure you saw the article last week about private jets and all those things, right? But something that we need to do, like they always tell us as electorate, we need to get involved. If you want to share in a company, you need to ask questions, right? Normally they have investor call, right? The essence for that is for you investors to even ask questions. You have AGMs, right? And if your stock is actually sizable, why not ensure that you even have somebody sizable on the board, right? You need to ask questions. You need to ask for accountability, because the honest truth is that, look, where there is no place for, when there's nobody asking any question, there is even the probability to do something wrong. But having said that, something that we've also seen from the CBN is that the CBN is also conscious of this. And they're also trying to put in place mechanism to ensure that, look, right, all these are deployed appropriately, right? And if you talk to most banks, a lot of banks everybody's learning now. Before it used to be that, look, there's no bank that can fail. They can't collect my license. But we've seen something happen this year, right? So the CBN is getting stronger, and we can see that the SEC is also getting stronger. Even the institutional investors, everybody is getting aware. Right? Governance is going to get more strengthened, because one of the reasons why we are having this huge amount is that, look, bring in institutional investors. Those so that it's not like a family bank. A bank it's likely a public institution, right? Have people that can even talk to you as an MD. Okay, give us your plan, and even for you to be a bit more accountable, right? I hope I'm able to answer that question to an extent. Thank you.
Yes, I think you did. Thank you very much. Let's now go to some questions for Segun. I'll pose two at this time. But the first one, how easy is it for one to trade his or her rights when the price is unfavorable? So the trading dynamics in a case like we've seen in some shares where the rights price is higher than the stock price. And then related to that, somebody is not very convinced with your intervention earlier. Says the explanation of Olusegun are not convincing enough. Is the price differential, if the price differential between the rights and the secondary market is in excess of ₦1? So that is a scenario that somebody is putting to you. What's your response?
Okay, thank you so much, Ole, and thank you for the person that asked that question. The first one, how easy is it to trade your right? Yeah, the market has really evolved, and now a lot of things have been automated to a large extent. So trading right has become so easy to the extent that all you need to do as a shareholder or investor is to fill your form, or even either manually or even electronically, because even
when you say form, the right issue form,
the right form, there is a renunciation part of it, because there are different sections. If you want to take the right,
on the form, there's a renunciation part.
There is a renunciation part. So you just feed the renunciation part and
put in the information
there. And you can submit it electronically, because there are even different electronic channels. In fact, the current mantra is that most of these want people to do it electronically, so that it makes a reconciliation easier. So if you are not that technically savvy, there is also the option to fill the form manually, but we encourage you to even do it electronically. So that once you fill that one, it's immediately just register that you want to trade your right, and the other part is just for you to now approach your stockbroker, who also ensure that guide you to the process of renouncing the right. There is additional form you fill, which enable you to now ensure that that right is actually electronically transferred into your CSS account. CSS account is your stockbroking account. And once it's your stockbroking account, you can now give instruction to your stockbroker to help me trade the right. Trade the right means to sell it. And once you also have the other party, in any market, there must always be buyer and seller. So when you are the seller in this case, if you have buyers that want to buy, and I love you, a lot of interest, a lot of people have also wanted to buy this right. Just like I mentioned in my previous intervention, there are a lot of other investors now that want to even buy the asset shares, that want to participate in the right, but because they didn't qualify for the right issue, they are also interested in buying the trader right. So they are on the queue to want to buy. So it's easier for you as an investor. All you need to just fill your renunciation form, and your stockbroker will take over from there, and you'll be able to trade your right. Then, as regards the other intervention,
the ₦1 scenario.
So the ₦1 scenario, what is he saying? That just like we said, a right issue is an option for you to say you are accepting your right. If you feel that that price differential of 1 naira in this instance you made does not incentivize you enough to be able to want to take up your right, you just default to the first intervention, which is the first question, that you are also encouraged to trade your right. Trading your right doesn't cost you anything. All you need, just submit it, and your stockbroker will help you trade it. And there is some money to be made. The money might not be very significant, but instead of leaving money on the table, you want to take up that money and make the money. So that is what I would say here. Thank you so much.
Thank you for that. I hope that covers that issue very well. I want to go now to Mrs. Adekoya, and very simple question, but perhaps just to clarify, is there a risk of buying shares through a rights issue? When I read that, what came to my mind is potentially if the offer is cancelled, you get your money back eventually. But I just wanted to hear your perspective on that.
Honestly, there really isn't any risk. The only risk that, that sometimes happens is that some rights issues are underwritten, and some are not. And if it's not underwritten, if it's an established organization, usually you will just get your money back. So there really isn't a thing, because at the end of the day, for a rights issue, existing shareholder, you get first of refusal anyway, which is a good thing. Like Dr. K said earlier on, there's some money attached to the rights issue itself, even if you're buying at a premium. So you can also trade it in that sense. There's less dilution in that sense.
Okay. All right, Ms. Adekoya, your connection seems to be a bit fuzzy at the moment. Okay, it's back. Okay. We lost you for a second there.
Oh, sorry.
It's fine. It's fine.
Oh gosh, I didn't even notice.
That's why we need the banks to have capital so that they can back up the telcos. No, it's fine. It's fine. I think we captured the message essentially.
Yes, I agree.
Very little. All right, but thank you. Okay, I want to go back to Dr. Okay. And someone is asking, what's the name of the agency that monitors the use of rights proceeds? Is that just the SEC?
The SEC?
How does that work in practice?
Yeah, the SEC. Yes, the SEC has an office, is a unit in a department in the SEC, and their job is to monitor use of proceeds, and not just for banks, for every issuer. Every issuer, you have to say what you want to use the money for. And given that the SEC is mandated to protect the investor, an investor has looked at those offer documents and said, no, they want to do A, B, and C with this money. The SEC will ensure that you do A, B, and C with the money. If you want to change it, so there's an opportunity. It's called change of use of proceeds. You have to now file it again, and you have to expose it to the investors again, so they will agree with you for you to change. So that's how the SEC does it. So it's the Securities and Exchange Commission that does that.
Thank you for that. I'm going back to Mr. Adekoya because there's a question for you here. Please, what is the implication of investing in an undervalued company or bank? And how do I know these companies or banks are undervalued? Well, for me, the first thing is that's what you want to do, right? You want to invest in an undervalued company so that the value is low. But I guess that assessment, how do we go about that in practice? So because I think it's a great question because the investing public is not that sophisticated. They may not have the tools and information to make that assessment. So what will you say to them? Speak to your stockbroker or what?
Well, yeah, you can speak to your stockbroker. But the thing about it is that you also can pick up, if the company is already listed, pick up their financial statement. So you usually look at their market cap.
Financial statement too. But
it's on the website. It's on the website under the investor.
No. I'm not saying they cannot access it. I mean, they may not appreciate the information there. They can't make sense of it.
There's a lot of information.
Whether or not it means that the share price is undervalued or not.
Yeah. So usually compare the net assets of that company and then looking at certain assets. For example, there are certain assets that are currently carried at cost on those books that have fair value. So if they are going to be sold out to somebody, so when you look at things around their intangible assets, around their technology, around assets and things, you can look at that and then compare it to the market capitalization.
You are talking net assets here. How many people know net assets? So, you know,
balance sheet. Go to the balance sheet.
I fully understand.
Maybe Ayokule can break it down. Ayokule,
go to the balance sheet and look at the number.
Balance sheet. People don't know balance sheet. That's the point I'm making. But it's fine. Well, I would say speak to your stockbroker, because at the end of the day, they have to break it down for you. And the market has evolved, saying that there are many analysts writing notes, so you can read those notes to the extent that you can appreciate it. But really, investment is a craft. It's a profession that you need professionals to guide you through.
Let me just
add something to that. Okay, sorry, Shegun, go ahead.
Okay, let me just like you said, consult your stockbroker, financial advisor. You know, it's just like a situation where somebody is sick. If you are sick, who do you talk to?
You have to talk to
a medical doctor. If you have, even doctors, you have different specialties. You have the eye person that's called optometrist. You have if there is a teeth that is worrying you, will talk to a dentist. If it's about your heart, you talk about your heart surgeon. So, and the same thing for investment. Investment is an established profession, the investment management profession, and there are different specialties within that space as well. So just speak to your financial advisor, if you stockbroker, investment manager, and the like. So there are different specialties, because you're like to Bolanle, stocking balance sheet, net asset.
They don't know this
ideas. They don't even understand.
They don't know. Even if they can read it, they can't appreciate how they can appreciate the value.
The best bet is to say for the investors. And there is a question in the chat that I also speak to this, because someone was asking there, if as a youth, how do you capture the youth to ensure that they catch them young syndrome? So I also want to use the point to say that there is what we call the Coronation Investment Academy, which we develop. And that investment academy is just online. It's like a gaming kind of stuff, whereby you go there, you can simple, basic investor education around what is investing, what is a stock, all those basic stuff, balance sheet that she has mentioned, they are there. You play with it and you can begin to understand the basic rudiment of investing. And that, currently we have over close to 25,000 have already subscribed on that investment academy, and we encourage our youth to sign up there and begin to appreciate the world of investing generally. Thank you so much.
Can I add to that quickly? Can I just add to that? The other thing that they can use, you know, earlier on we're talking about technology. A lot of them have phones. They can use AI on their even on their WhatsApp. They can use AI, they can use copilots, they can use Bard, the number of things. So if you have terms that you don't understand, you can type it in there and it will tell you what it means as well. It's important. Even information about certain companies, they're all out there. If it's listed, it's out there. So make use of it as well.
I hear you. We certainly need to educate ourselves if we're going to be investors. I just feel that at the same time, you need professionals to guide. Dr. Okay, I was asking if you wanted to chime in on that point too.
Yes, from the official investor protection point of view, we have been encouraging people to, if you don't have the expertise and you don't have the time, so if you have the expertise and you don't have the time, or you don't have the expertise, don't pick stocks. Don't buy any stocks. Look for an investment advisor. That's even the best person before the stockbroker. Why we've been calling stockbroker is that they are ubiquitous, they're everywhere. But we have investment advisors. Remember that stockbrokers make money when you trade. So there's that hazard, moral hazard there. But the advisor can be dispassionate, you know, and tell you this is what you should do. And people often run away from these people thinking that they are expensive. They are not. They are not expensive. The SEC limits how much they can charge you. I'll give you an example. If you wanted to invest through funds, the expense ratio in Nigeria now is 3%. That means they cannot, the whole expense, their fee, their everything they do, they cannot exceed 3%. And we are in our market, because of competition, we are seeing 1.5%. So what it means, let me explain it. You give somebody 100 naira, the person makes 10 naira for you. and the person is taking 1.5% of that 10 naira. That is that's 15 kobo.
Naira, 50 kobo.
15 kobo
yeah.
out of the 10 naira, 15 kobo. So the money the person is taking is very, very small compared to the value he has given you. So we encourage people to please patronize registered investment advisors, capital market operators.
I'm happy you mentioned that, because there was actually a question. I'm sorry to cut in. There was actually a question about that. Some people don't know how to even find these people. So perhaps you can just guide.
sec.gov.ng, CMOS search, CMOS search. You will see a list of registered capital market operators doing different things. So if it is investment advice you need, if it's a fund, if it's asset manager, if it's stockbroker, they are all listed. Do not work with anyone who is not listed. The advantage of working with listed people is that they are regulated by the SEC. So we have had situations where people give money to someone who the SEC does not know. And then when the person runs away with the money, they come to the SEC and say, SEC should pursue. We can't pursue people we don't know. So just go to the SEC website, sec.gov, sec.gov.ng. You type, you in the search button, just see CMOS. CMOS means Capital Market Operator Search. If you just click it, you can easily see a list. So if anybody comes to you and says, oh, I'll help you do this, do that in the market, tell him thank you and go to that list. Once you go to that list and you see the name of that firm, that means that that firm is fit and proper, it's allowed and is regulated. So you're protected. So that is the advice. So please don't try to pick stocks by just what your friends told you or what you saw on TV or anything. Get someone to advise you. And the charge is not much.
Right. I haven't forgotten about it equally, but I want to come back to Mrs. Adekoya on this question, because I am seeing some feedback on the Q&A, and it seems this issue around the pricing of rights and the pricing in the market has not really been trashed fully. And I thought perhaps it may be useful to really appreciate the different dynamics at play in an offer like this. So I would think that the prudent thing to do is that if the share price is lower, then I buy the lower one, right? Because I make more money if I buy lower, right? But then maybe you can speak to some of the other dynamics. So for example, there are some people who have a reason to pick up more rights, maybe to increase their holdings. And so that now makes your rights, the rights that you are relinquishing, valuable to them, and they want to pay a value for it. And so maybe you can just speak to the various dynamics around the pricing of rights and the plethora of the investor community that may be at play here and have different objectives.
Okay, so it's important that people understand that the premium, in a sense, you're paying for is actually giving you first dibs or first right of refusal, in a sense, because as we said, if you have aspirations, especially for a bank that has a very strong financial, there's confidence, there's the fact that they're growing, there's a lot of opportunities, that actually is a signal to you that there is something there and to give returns in future. So this is one of the reasons why it's important you should know what you're doing. Yes, it's all well and good that you can go to the market, but what if you don't find the quantity that you're given? Because remember that your current shareholding gives you an opportunity for the number of shares or rights, in a sense, that you can you have access to. So that, in its sense, is where the value is for you. It also reduces your dilution, because it means that later, when it's time to give out the dividends, what dividends you're getting will still be based on your ownership. So that doesn't go away. So it's important that people see it. Another thing about it is that at the end of the day, it's also an opportunity to raise more capital in a quicker way for the bank, in that sense, with also protecting you as investors. I know that normally, you always sort of see them slightly at a discount. But we keep talking about the fact that with our market at the moment, when you look at the Nigerian capital market, it's maybe not as dynamic as it should be. And so sometimes these companies, as I will repeat, are undervalued. And usually the rights issue is just representing what it should be. One more thing I also have to mention. It may seem that it is slightly, there's a bit of a premium that you're paying on the rights issue now for your new shares that you're looking for. However, I think usually when you see, there are a few case studies, if you look at a few case studies around the world, around when rights issues are issued at a premium, down the line, and then when the market kickstarts and as trading happens, actually your shares actually become more valuable. I think it's important that we tell people that a lot of times when you look at the case studies of things that have been issued at a premium, that actually happens because you create a buzz, you create a demand. It brings about signaling to the market because of the fact that there is that financial stability that the company is saying that we have, and we're able to do this, and we have investors that are there and that can do it in that sense. So they should trust the process, and hopefully it will reap its rewards later. I think it's important that we mention that as well.
Okay, thank you for that, Dr. Okay. I feel you have some things to say on this point as well to educate our. So I'll allow you to speak.
Yes, I do. When it comes to premium, the way I look at it is, the value you are selling. And remember that when you make an offer, it's a risk you're taking. If you're not able to get the required amount, most times, if it's not underwritten, like some of them now, the SEC will cancel it and ask you to. So it's a big risk. So for somebody to take that risk and say, this is where I'm putting this, remember that person has more information than you outside. So the person knows the value at the back. And if you look in the past few months, banking stocks have really gone down, really. So you have to look at that. You have to also look at potential going forward. So there are many reasons why somebody would say that I'm going to put my price for a rights issue at a premium. So that's why I'm saying that anybody who really is serious about this should really think through it. And I believe that those banks who have come, like Access Bank, I think Coronation is the one working on the Access Bank one. For those who have come in the market, I think that there needs to be calls. There needs to be investor calls around why that pricing is that way. What is the bank seeing that the secondary market is presently not seeing? So those are the things that one has to look at. But I think that it's an indication of confidence. It's an indication of where the internal people see that they are going. It's an indication of what they think they have. So the question is, if I was to invest, I will ask them to tell me that thing that they are seeing that is making them give that premium.
Right. And if I can just add my 2 cents to this point, there are a couple of reasons why I think that investors should still consider buying the shares, even if there could be potentially a decline. Now, in essentially every case, that was not the case when the offer opened, right? So it's market conditions that have seen these share prices fall back. So I think it's important to note that point. But beyond that, I think if you have a long-term investment strategy, I think that investing in the rights, one, reflects your confidence in the company's future, and then also support for the company you're already investing in. So companies deserve your support, right? So even if the share price has fallen back a little bit, you can continue to support them by buying the rights. But even beyond that, I think another point which hasn't been mentioned is the issue of transaction cost, because there's no transaction cost when you buy through the rights. But if you buy on the market, there's a transaction cost. At least the stockbroker would charge you the SEC, their CSCS fees, and so forth, depending on if you're buying or selling. And so that price that you're seeing on the market is not what you're eventually going to pay. You're still going to pay something above that. So it's important to point that out. So, you can talk about the fact that it's temporary. And this is a moment. You have an opportunity to buy these shares. In another couple of weeks, we don't know where those share prices will be. And you may start thinking, maybe I should have bought them. So sometimes it's better not to overthink these things. That's my impression. I also think that if there is value, if we have analyzed the shares at the time they were being issued and we felt there was value, then I think people should still consider buying them. But that is just me. All right. As we begin to wind down, maybe I should go to Ayokunle now to give his perspective on the situation. We have a couple more questions. I was wondering if you want to take a stab at some of them. Okay, just give me a second. I'm just trying to look for one here. Okay, now this is one that is taking people back. Someone is saying, I bought Oceanic Bank, now EcoBank. It's not encouraging because no dividends since then. So I guess this now speaks to the history of people investing in markets and the implication. Because, you know, the interesting thing is that for many people, these public offerings, rights issues, are very often the only times they invest. And they don't go to the secondary market. So that is still their experience. So what will be your message to those people right now?
To those, a lot of people got their fingers burnt during the 2004, 2005, and we can classify them into various categories. The first of, I think one set are those that they can't find the documents, right? You've paid for something, but thank God now, I think the SEC is more efficient now. Most of the documents are digitalized. It's easier once you buy, your accounts are credited. That one is relatively easier. Then also something that keep on saying earlier is that, you know, I'm sure you've heard this a lot of times, that look, if you think something is expensive, if you think education is expensive, try ignorance. You think professional fees are very expensive, right? Okay, that you are going to pay for it, whether you like it or yes. And I love the way Dr. Oke analyzed it for. You can see that the investor fees, the amount that you're paying to the advisors is very small. And a lot of people, if you ask a lot of people that got their fingers on, hey, I saw it on TV. Oh, my daddy is buying it. Just my friend is buying it. But if you have an advisor, the person will sit you down. And let me also emphasize it. Remember that, look, your view, your financial state, your plan for the near term and your plan for the future will determine the kind of stock that we buy. A stock doesn't mean that it's good for everybody. A stock that is good for Mrs. Adekoya might not be good for Dr. Oke. The one that is good for Ayokunle might not be good for Mr. Wadoko. So it's an advisor that will sit you down, that will tell you, at times the buyer will tell you, even buy it now. You know what? In the next 2 months, sell it off. So please, I will advise you, please, as much as possible, let's get an advisor to guide us. And I will also hack again, please, any stock in which you've invested in, you need to don't be a passive, just buy and just go away. You know, some people, some companies that the TBN took over, they didn't even know they have shares in it. When they have their accounts, read it. Ask the advisor, okay, what does this mean? What should be my next step? Should I sell it or don't just buy and just keep and just go away, right? But agree. But don't forget, stockbroking, buying shares is risky, right? The returns are not fixed. So you need to get an advisor to guide you appropriately.
Thank you very much, Ayokunle.
Can I just add to that? Sorry,
yeah, go ahead, real quick.
The other thing that the advisors are good for is to help you spread your risk, so you can, you know, they'll tell you how to cut your money in that sense. You know, there's the 20, 30, 40, you know, there's the way they do the rule, depending on your age and your target and all those things. So that's why advisors are very, very important as well.
Right. Shegun, I'll give you the final word as we wrap up, because unfortunately we can't take all the questions now. I encourage analysts to type in responses where you can. I mean, some are more or less just greetings and appreciating you, but beyond that, there could be some other questions that you could respond to. But I'll leave you with the final word, Shegun.
Yeah, thank you so much for giving me the opportunity. I'll just echo the sentiment of the panelists. I know there is still a lot of investor education that we need to do in Nigeria, and we'll continue to do it. And that is the reason why we're having this webinar. We'll be having a series of this webinar going forward at our Coronation. So I will encourage our participant investors, consult your financial advisor, investment advisor, stockbroker if you are going to be engaging in any investment activity. Just like I said earlier, if you are sick, you go to a doctor. So if you want your financial health to be sound and safe, you go to what? An investment management professional. So I will encourage them to actually go get educated. And there are different series, even NGS at the NGS level, at the SEC, there are different avenues for also engaging in this investor education series. And we are at the vanguard of also doing that. So I will encourage us. You will be seeing a lot of other communications from regarding this kind of series. So when you have the opportunity to join and participate, and I'm very sure we are better enlightened today than we were before this webinar was held. Thank you so much for joining us, and I think I will stop here.
Thank you very much. No doubt, I imagine everyone that has participated in this has been informed, educated, know the pros and cons of taking whatever decision you will take. And maybe I can just echo again that last point, even though it may sound like it's a sales pitch for the rights issue, but I think it's important to also think about another reason why you're investing in the rights issue, and that is to support the company you're already invested in. So if 50 kobo is the difference between you supporting a company to make sure its rights is successful and you buying it cheaper in the market, I think sometimes it's good to just support the people you believe in. And if you see the CEO and tell him you bought the rights issue, I'm sure he will thank you very much for the support. All right. On that note, I want to say thank you again to all our panelists. And I will now yield to Head of Operations at Coronation Securities, Mojisola Aremo, to deliver some closing comments and vote of thanks.
Okay, good afternoon, everyone. And a very big thank you for every one of us that have joined this webinar. It's been an insightful one. First and foremost, I want to appreciate every one of us for joining in, for listening in. I am sure we did one or two things. Special appreciation to our keynote speaker, Mr. Oke, Dr. Oke Omiano, for a wonderful and insightful discourse. Trust me, sir, we have learned a lot from you and we appreciate you. Also to our panelists, Mrs. Bolali Adekoya, we say thank you. Mr. Ayokunle, we say thank you so much for acceding our request, for coming to share one or two things with us and for enlightening us on this financial journey. We know that with all you have said, we would put it to practice. We would ensure that we go to our financial advisors, and I am sure even those that are on the call to also do so to ensure that they have, a firm financial stability. Thank you so much. And to Mr. Wale, thank you so much. Mr. Wale, rather, thank you so much, sir. You have really, your wonderful facilitation, as you know, it has helped this webinar session. It has been enlightening. It has been a wonderful one. Thank you so much. And to Mr. Olusegun Owadokun, the Deputy CEO of Coronation Securities, we are saying thank you. Thank you for the opening speech. He actually gave, he gave a good vibe towards, this webinar. Thank you so much. And thank you for your contributions. For the contributions so far, we say thank you. And last but not the least, I want to say a very big thank you, a very, very big one to Mr. Jibola Odedino, our Chief Executive Officer. Thank you for the leadership. Thank you for all the advice, the leadership in ensuring that this webinar is a success. We truly appreciate it. And to every one of us, we hope and we believe that we'll keep this alive and we'll keep investing because, there are lots of opportunities for us in it. And for as many of us that would want to contact us in Coronation Securities and you want a broker, you can reach us on CRC, that's our email address. You can reach us on crc@coronationsl.com. We would be very glad to take your inquiries. We'll be very glad to help you in this financial journey. Or better still, you could also call us on the numbers that is displayed on the screen. We appreciate us all. Thank you so much and do enjoy the rest of the week. Thank you.
Thank you very much, Mojisola. And again, I want to say thank you to everyone for being part of this. I think it's just been very well attended and very valuable. Again, many thanks to all our speakers and of course to Coronation Securities for putting it together. So until we meet again for the next event, enjoy the rest of your day, and I hope you find profitable investment opportunities in rights issues after this. Thank you again, and have a great day.